Okay, back to the world of accounting, debits and credits. Gotta love it. Okay, let's see what happened here. They bought 5 acres of land with a building that will be used as a warehouse. They paid $210,000 for the cash, for the asset. That's what they paid. According to appraisals, the land had a fair value. Land fair value of $142,600. Building fair value $87,400. That's $230,000. Okay, so $142,600 over $230,000 times $210,000 is how much we will assign to the building. So that's $130,200. Now I'm lazy. I would just subtract that from 230 to come up with $79,800. But if you are one of those super picky persons, that's really what we're doing. So that's what I would assign to the building. So my first journal entry would be debit land, $130,200. Debit building, $79,800. Credit cash, $210,000. Okay. Let's see, the next thing. They signed a $51,000 non-interest bearing note. $51,000 payment is due a year from now. 9% is a reasonable interest rate. So what we need is the present value of $51,000. I equals 9, N equals 1, and when you do that, you will find that that works out to $46,789. You can either get the present value table, and the factor for that happens to be 0.91743, or you can do it on your calculator. In either case, that's how much we're going to be paying right now. The equipment is worth $51,000. The difference between those is the discount on the note payable. So that's our next journal entry. So we have equipment, $46,789. The note payable is $51,000. The plug number is the difference, $4,211. Note that discount is not added to the equipment price. It's optional. You didn't have to pay interest. You could have gotten this by paying cash. So that's not a normal, reasonable, ordinary, necessary expense. Okay, let's take a look. Truck was donated. Similar trucks, $3,600. That was an easy one. Truck, $3,600. Gift from Santa, $3,600. Okay, the next one says we paid our attorney $3,000 for organizational costs. Organizational cost expense, $3,000 to the attorney. Okay, next one, the purchase of machinery for $26,000 plus all normal, reasonable, ordinary costs to put the asset to its intended use. You needed to have it delivered to use, so it comes on the books at $27.50. Machinery, $27,050, $27,050. All normal, reasonable, ordinary costs. Now the next one, we bought some equipment, but we didn't have some cash, so we traded our shares of stock. Now, we have to use whatever price is most reliable. Well, our stock is not traded, so the most reliable price is the cost of the equipment, $6,600. So we'll debit equipment for $6,600, and we'll attribute the $6,600 to our common stock account. And then the last, we acquired a tract of land at a cost of $31,000. We paid $3,000 now, and we signed a note for principal and interest due in 1 year. Well, we purchased the land for $31,000. So the land was $31,000. We paid $3,000 in cash, and we signed a note for $28,000. As we pay that, we will recognize interest expense, and it will not be added to the land.